Good morning, everyone. Welcome to this live intraday strategy webinar. Today is Thursday, April 13th, ahead of an extended long holiday weekend here in the U.S. Great to be with you guys here this morning. Peter, Pooja, Raf is in the house, Steve, Ziad. Good morning to everyone in the room. So I have a whole huge list today to get through, so I'm going to pace myself. On the docket, obviously we want to go over DXY levels. As we've seen that turnover accelerate. We highlighted key support yesterday, which we're getting the rebound today. Still looking for exhaustion on the rebound. So we'll take a look at the DXY in a moment. Keep in mind, you do have the release of the University of Michigan Consumer Confidence numbers here in the United States a little bit later in the session. Here's what those are supposed to look like. We just got the release of PPI numbers, by the way. Didn't see much of a market reaction, but University of Michigan supposed to come in at 96.5 after 96.9. That's coming off of a previous earlier strong read too. So in general, we've been getting some pretty strong sentiment from that survey. Continue to see if that carries over a little bit later in the session at 10 o'clock in the U.S. The Aussie and Kiwi levels from last night, the Kiwi breakout now testing the monthly open, the Aussie down, or the Aussie breakout, I should say, on the back of those really strong employment figures yesterday. So we'll take a look at those. Previous update, I was out yesterday, so dollar CAD, sterling, Aussie CAD, and Aussie yen, Euro Aus, Euro Key, Euro Yen, and dollar yen. Take a quick look also at Euro CAD. If there's anything else that you would like to review, feel free to throw them on the message board. Good morning, morning Pooja. Hope you're doing well. Cheers on that. Just closed out a euro dollar rip and dip short for 17 pips. Yeah, it's been working out pretty well, right? Thanks, Pete. I appreciate that. Yeah, I'll be in surgery tomorrow, so I hope that we'll be back up and running next week without any problems. But we will see. Also, the Nikkei turnover and the breakdown of that longer-term slope. We'll take a look at that as well towards the end of the session if we have time, as well as the commodities. All right, let's jump right into price action. As always, if you have any questions or trade setups you want to add, feel free to throw them in the mix. Euro dollar, Pete, I will add that. I actually haven't been tracking euro dollar as much as the euro crosses, but we'll take a look for sure. Okay. So keep that in mind. Heading into the U.S. Open, here's what the relative performance looks like. Horace, Euro CAD. Huh. Yeah, we'll throw Euro CAD in there too. It's on the list. I got you, Horace. No worries. Here's what the U.S. performance looks like into the Open. Aussie dollar is the best performer, up 0.76%. Again, on the back of that really strong employment data print that we saw last night. Kiwi up 0.55, CAD up 0.14. So the whole com block with a nice little bump today. Looking at the biggest loser, Euro down 0.36, Yen down 0.17. So that's coming off of an interesting area of support as well. Dollar Yen, we'll take a look at that. And Pound, as we noted yesterday, again, looking for some near-term exhaustion, still looks constructive. Or actually, I guess this was Tuesday's update. But still a very constructive trade in my opinion. I think near term you look for a little bit of an exhaustion trade, but still love the pound breakout. And that's something that we've been tracking certainly here on SB for quite some time. All right. Dollar index looks like this. Here's what we were looking at last night. You see that red slope? This is off the initial lows that we made back in March. It's just a parallel, sliding parallel of the same slope that we derived from these 3 points that we've been following in the index. So that slope converged on the 2015 high day close, which converged on the 50% retracement of the advance off the lows. Nice little confluence support. As we said, could see a little bit of a relief here, but the broader focus remains lower while below yesterday's high. Yesterday was a pretty hard break. You saw that move below the weekly opening range, which shifts the focus lower. And as long as we stay below 100 spot 77, okay-ish, I want to continue to favor the downside. If you look at this on the daily chart, it's a lot clearer, okay? Boom, you get a little bit of a bounce, maybe as high back as that open, 100 spot 70, and then you look for the continuation lower. Critical support for the dollar index, if we break here, you know, initial target's 99.53, but it's down here. You have the lower parallel, you have the 200-day moving average, which hasn't been touched. in the index since last year, October to be precise. And just a bigger area that you'd expect a little bit more of a reaction off of. So here's what it looks like on the intraday. Again, here's what it looked like yesterday. You're coming right off this region, rebound. Initially, you were looking for 100 spot 40. Looks like we're making a move through that now. Monthly open comes in right here, 100 spot 50. And both of these are areas, specifically, I'm looking for some exhaustion here in the index. So you might have a little bit more to go to buck the trend a little bit. Obviously, it was a big spillover. You know, whether you want to attribute this to to Trump coming out and saying the dollar is strong or not, at the end of the day, we've been talking about dollar resistance since the start of the week. So here's the pullback. Let's see how much the recoil has. Still think we make another low here in the dollar index. Okay, support still is at 100 spot 2 right here. 2015 high day close has been a really nice pivot in price. And again, 9980 would be a 618. 9950, okay, would be that 200-day moving average, or excuse me, that January high day close. And then the 618 of the broader move, 9940, is nice, this pocket zone right here. So the near-term targets are pretty clean here on the dollar index. Looking for some exhaustion on this move higher. Whoops. Near-term bearish invalidation 100, spot 77. Any questions on the DXY? That is number one. Odd as it seems, markets are closed tomorrow for Good Friday here in the United States, but we still do get data. The government's open, so we are going to still get the release of those retail sales numbers, and I think, excuse me, CPI numbers as well. So, typically a pretty big market mover, and one of the major focuses for the Fed at this point, it's not going to be a release during market hours. We're expecting an uptick. This is what you want to look for. Again, U.S. markets will be closed, so you want to be very hesitant about getting involved in a trade like this when there's such thin market liquidity, but still, the core is expected to uptick from 2.3 to 2.1, okay? Year on year, expected to downtick from 2.7 to 2.1. These are the ones that you want to kind of pay attention to. So it's going to be an interesting dynamic to see how this plays out. If there's a huge variation, you could see a pretty market gap into the open of Sunday. As far as having exposure over the long weekend, look, that's a complete subjective question you got to ask yourself. Personally, for me, I'm not looking to enter anything new per se. I still have a little bit left over, believe it or not, from that dollar CAD position. It's just a minuscule amount. Stop is well in the money, so I don't really, at this point, care to see how that pans out. My limit's just a little bit lower. If that gets me out before the weekly close, so be it. If not, the positions are well defined. But taking on new risk from here, maybe not today, but tomorrow, is something that you want to be mindful of. That said, look for these numbers at 8:30 tomorrow. Same time you get the advanced sales or retail sales, the advanced print rather, for March. That's expected to contract a little bit on a month-on-month and year-on-year basis. Okay, that's a mouthful. Any questions on the DXY or data heading into the close of the week? Feel free to throw them on the message board. Other than that, let's jump into the juicy stuff. Aussie dollar, number 2. So, as I was writing this thing was checking near-term resistance, 75.37 into 75.42. A nice zone that we've been tracking. You had some slope there within the confines of this decline. And while we were at resistance, my personal outlook was looking for a pullback to get long. Heading to the release, obviously, the data came out pretty strong. It popped right through. So I didn't get an opportunity to get back into this. But we're now checking an area of near-term resistance still that, if continued to be compromised, would suggest that you're at a bigger turn. If you read yesterday's note on the Aussie, basically an outside day reversal off support, taking it through the weekly opening range high, that's, classic hallmark constructive move. And that's typically something you want to go with. You don't want to fight. What that is, for anyone who's new here in the room, again, an outside day reversal on a candle close basis means the previous session closed lower on the day. You took out the previous session lows, and then he closed above the previous session's highs. And on that swift reversal move, you took out the weekly opening range. Here's the weekly opening range, or here's your weekly open rather. You set a low, you set a high in a Monday, Tuesday stretch. You test the low, it fails. You test the high, it fails. You test the low, it fails. Boom, breaks the highs. You're bullish against the lows, looking for a Thursday, Friday high. Well, it's Thursday. I'm not saying this is the high, but I'm just saying you're making that high now. And you're at near-term resistance. I know we're kind of hobbling through it right now. It's a basic 38.2. That's not what's really stressing me. It's just basic slope. Okay, it's only a 2-point touch, so I'm not going to get too crazy about it. But at the same time, you'll just a little bit higher. You have some of those stretch highs from earlier here and some nice pivots in price. So long story short, I'm not really interested in engaging in any new long scalps on Aussie from here. If anything, I think this spikes into new high and starts to fade a little bit. But the long and short of it is you do need to respect the reversal off the low that we've made here. So I'm going to take a little bit more of a neutral stance from here. Levels prayed out pretty good. Again, here's what it looks like on the 240, or the 120 rather. Here's what it looked like last night. We were sitting right there. Data came out, plowed right through, and we're sitting right here. Near-term bearish invalidation. Okay, so if we close above this, or if this thing holds into the U.S. session, yeah, it's probably got a little bit more juice to go to the upside. By the way, the data looks like this. It was an interesting read for a couple of different reasons. Most notably, obviously, the beat on the headline employment change. 60.9 thousand versus an expected print of just 20. But even the underlying metrics were very strong. Unemployment rate, while holding at 5.9%, did see most of the gains by way of full-time employment, which has been something that we've been watching. Part-time employment contracted by 13.6. You also had an increase in the participation rate from 64.6 to 64.8. So an increase in the participation rate with unemployment holding, that's a really good underlying development for the labor market. So strong print. Any way you slice it, is a very strong employment report from Australia. Okay, just the fuel needed to get this bump off support in Aussie. Now that helped some of the Aussie crosses as well, which we'll go over later in the session. But certainly from the dollar standpoint, I'm a little bit more hesitant to chase this one, like I said. Not really loving it too much on the daily chart just yet. I'll have to see if today's session closes. A little bit at risk of an exhaustion. You're still in overbought condition on the 120. You're still in overbought condition. 60 has come back. Yeah, so watch for a little bit more. If you get a new high here, it might be something you might want to fade near 76 or 76.40. Monthly open comes in 76.30 for a pullback type of scenario. But basically, thinking that you kind of look to fade this near term. All right, that is Aussie dollar. Number 2, pick up the pace. Number 3 is Kiwi. Here's what New Zealand dollar looks like. Not much play since we wrote last night's piece. At the end of the day, it has made a break of the objective weekly opening range, which shifted the focus higher. Also, basic trendline resistance extending off the high here in red. So look, it wasn't quite necessarily, well, actually it was an outside day reversal off the lows, but wasn't quite necessarily the most cleanest move. But here it is nonetheless. Okay, we're checking the monthly open, and that's resistance near term. The monthly opening range high is just a little bit higher, which would be a little bit more of an objective break of the monthly range. That being said, we are holding that initial, near-term target at the monthly open at 70.05 at this point. So look at the U.S. Open and see how we react on this one. If we continue higher from there, I am going to treat it as a near-term, again, kind of reversal play. Here's what it looks like on the intraday charts. Take this out to 240 just to give you some range. But that basic trendline resistance off of the February highs right here, tagged again here in late February. Here's the tag in March. again in March, again in early April, boom. Monthly open, near-term resistance. Break from here. Again, like I said, the monthly opening range is just a little bit higher, near 70.22, but 70.75 would be just the initial target, a basic 38.2 and some swing highs here. Some parallels of the same slope take you even higher, but you see the ramifications here if we do hold above the weekly opening range high. So right now, you're going to bring up support from down here at 68.60. That's what I would use near term as bullish invalidation from the breakout that we've seen. It would be 69.30 again. We're still within the confines of that same range. That is the weekly open, 786 retracement, forward slope resistance, basically heading to the close, to the open of Asia tonight. That's what you want to respect as the bullish inval for this reversal in Kiwi. Questions? Objective look at price action. Okay, a test and break of the initial weekly opening range low, reversal through the weekly opening range high. Objectively, you know, that's constructive. Just like it is in the Aussie. I think it's a little bit more convincing in the Aussie, which is why I put that out kind of as the highlight play yesterday. But, you know, it's the same thing. It's the same thing. Any questions on Kiwi dollar? Going once, going twice. Also, one that you'll want to pay attention to heading into the close of the week, U.S. data, obviously tomorrow, CPI figures. You do get CPI figures next week out of New Zealand, and we will check that play ahead of that release for sure. Okay, moving right along, dollar CAD, number 4. Here's what the loonie looks like. Daily chart. Like I said, I still have a sliver on. This is kind of a long-term position for me, I guess, over a week at this point. Not really typically my style, but I've just been chipping away out of it. I think it was a really nice reversal that we caught up there. And limits are at me for 32.30s where I got out of most of it. So kind of just looking to see if we can get this last drop into the 32 handle. You get that 200-day moving average, the former swing highs and opening range highs from February, all lined up right here. So you're gonna kind of just leave it and see if it gets on. Like I said, if it hits it, if it hits, not. If not, we've had a nice ride on the way down. Here's the intraday chart looks like now. Here's what we looked like earlier in the week. Okay. The near-term support was 32.84. That was the level to beat. That was the monthly, well, first you had the monthly open just higher here at 33, but this was the level to beat, okay? The near-term consolidation that we were talking about in dollar CAD, it worked on a couple of various different shorts off that resistance region. Again, 34.30 was the sweet spot that our shorts were actually just above that. At this point, we're dilly-dallying right around here, right? So I'm kind of just holding on to it, see if we get that dip into 32. 31.80 would be the sweet spot for the sort of exit. But again, you're heading to the close of the week of a holiday, thin holiday trading. Here's what it looks like on the 240, and just to show you a picture of the consolidation break that we're making. An objective break of that is a couple of different measurements I'm looking at. 130.16 would be sort of an initial play there. 100% extension off the high would be that 31.84. It's my initial, like I said, my limit for the rest of the position of the minuscule piece is actually just right here, just ahead of that 31.80. And then, you know, there's room here. Now, this region for me is a little bit more critical near term because, first of all, as you guys are, if you haven't heard me say, you've probably heard me say a million times, my favorite Fibonacci confluences, your 618 retracement off the low, your 100% extension off the high, the convergence of both of those on basic parallel support. Now, you know, you have to, you know, you can consider that a tag, but if you take the resistance here, 3-point touch, confirmed resistance, a parallel off the lows, well, that converges even in time heading into the close of the week. So sort of a really nice spot for dollar CAD in my humble opinion. If we do get a dip into that, I kind of just don't even want to be short anymore near term. I do think if you get a rally, you do want to sell it still. But on the near term, that's sort of the focus and focal point for support I'm looking for. Where's your stop now? I just want to learn how you manage a position like this, Pooja. So the stop now for me, Pooja, is actually at the at the monthly open, 33. If you remember when we came in here, we saw the bounce. Once we saw the bounce here, we brought it down to the weekly open. Okay. Obviously, once we saw the break of the monthly open, at this point, I kind of put it at the monthly open, and that also happens to be this swing. Excuse me. Yeah, I was going to say it happens to be yesterday's high. Is it yesterday's high? Just below yesterday's high. Just below yesterday's high. Typically on a move like this, Pooja, if the monthly open wasn't there, I'd put it against the previous day's range high. Because the day that you make the break of whether it's the weekly opening range, whether it's the monthly open, or whether it's the weekly open, the day that you make that break, typically if you get that run through resistance or breakthrough support, if the market reverses and goes through that daily high, typically, finito, that story's done. So I give a little bit more respect here, the fact that the monthly open is here and that it was former support on this breakdown here. So I just put my stop just above that. Otherwise, it would be against the previous session high, so it'd bring it a little bit higher to 33.30. Does that make sense, Pooja? Hey, cheers. Says, okay, great insight. Thanks. Hey, more than welcome. Again, typically I'm not in the position for that long, but I know dollar CAD, and I was kicking myself on this breakout here. You didn't get any chance to get back in. It just kept going. So I kind of didn't want to let go of the position because I knew that, especially after you see the bounces be really pathetic like that, if you're not going to get a chance to get in, it's just worth it to hang on to a little bit of a position, kind of just ride it out. All right, sterling, number 5. Any other questions on the loonie? Feel free to throw them out. Number 5, British pound, also another breakout trade that has worked out phenomenally. We started off the week noting that we were at near-term support. I thought 24.20 was going to be a little bit bigger of a hang-up, and I was looking for the pullback to get long. Well, doesn't always plan out the way you think it does. The breakout continued to pan out. 24.60 was the initial region of resistance. That broke. 25.20 was another target. This was the final thing that we talked about, was 25.70. Okay, and that's just some former swing highs, but a region of resistance that you're seeing hold right now on the pullback. So for the pound, again, here's what we look like earlier in the week. For the pound, you're basically above that 618. Here's the monthly open, 25.70. And now we're pulling right back into former support or former resistance, now support, 25.20. For the pound, same thing as the Aussie. I think you're seeing some exhaustion. I don't want to chase the long side from here. I think if you get a pullback near 24.60 would be like a gift. Bullish invalidation is at this point. Still have to pull it basically up to 24.10 at this. Instead of the weekly open, we'll pull it up to here. Don't really think you get that low, and to be honest with you, if it gets that low, I'd be concerned. I kind of want to stay above this median line at this point in price, but your breakout from here, your key regions of resistance, same levels, 26.20, I want to call it 26.16, basically the high for March, okay? Basic trendline resistance, all converge there. You have this sliding parallel, 1, 2, 3, 4 touches of support. Got kind of messy here on the break, but then it was nice resistance, nice pivot support, nice resistance. That converges there. So all that's like 26.20, 26.16. And then beyond that, one more key zone would be 26.70 into 27. Okay, that's the 2017 high, obviously. So if you break through that, your basic break of the yearly opening range would dramatically shift the focus higher for pound, any way you slice it. That's just an objective look at price action. Okay, here's your yearly open. You make a yearly opening range high, yearly opening range low fails ahead of the lows. It's consolidation, but that's why this break is so big. And if 27 gives out, that's an objective break of the yearly opening range to the upside. Now, this is all conjecture, and this is still way too early to talk about, but just to give you guys a highlight of kind of where my mindset is with the pound. So again, even at the March highs, you want to be mindful. You got that 200-day moving average again in the pound, which hasn't been touched since last year's uh, Brexit breakdown. So that's another thing that you're also looking at as a major highlighted feature there. So the levels, bottom line, are absolutely critical and absolutely clear, rather, for the pound. Near term, you're testing the opening range highs for the month. You're testing a monthly open. Could get an exhaustion play. Stay constructive above. Here it looks like 24.30. What do we say on the intraday chart? 24.20. Yeah, that's fine. Well, this is definitely going to be your near-term bullish invalidation for now. And the topside targets, like I said, are pretty clear as far as where we want to go on the upside from here on a breakout. Beautiful trade. Again, just stick with price action. Forget the story. Forget the storyline. Any questions on British pound? Kelly says, to the moon, Michael, to the moon. Haha, someday the sterling will. And again, if you're looking at it from a technical standpoint, the potential is definitely there. Could be huge if it breaks. It could be huge. And guys, if you remember, way back in January on the reversal here, this was the first onset after the initial January opening range break that was telling us there was some sort of change in behavior. And even on the correction here, the nature of the correction, the nature of the rebound, the consolidation that you're seeing in price, all the fact that it came back on the back of the lows that we made into the year were on the back of some really strong divergence. I mean, there was a million things on this. So yeah, once we clear this godforsaken region, the potential for the breakout to really stretch its legs is there. Absolutely. Absolutely. And the fact that this whole Brexit thing has everyone telling me, you have no clue, guys. Just being in the business and people knowing that you're in the business, that once you start getting phone calls from random friends you haven't talked to in years that are asking what they should do because of the whole Brexit crisis, that's when the story is played. And that's when you don't want to sort of make any major trades based on a storyline. Aussie CAD coming up here, number 6. Here's what some of the Aussie crosses look like. These are the interesting ones that kind of panned out a little bit deeper on the low than I thought, but the reversal is still right there. So Aussie CAD was something that we were looking at back here on the 11th. 99.57 was an entry point that I was looking at. Like I said, the probe got deeper before the rebound here, but the basic premise was that you're coming into the lower parallels, you're coming in some basic lateral support levels that you want to pay attention to. The spillover got a little messy, but here's the reversal that we were looking for. Okay, and again, there's what the price looked like. So you got that downside break below 99.57. It spiked right into that lower trendline support and then reversed higher. So to be honest with you, I actually ate a stop on that spill. Didn't expect it to go that far. Again, the reversal did give you another opportunity to get long, and here we are right back at the weekly open. So we're unchanged essentially on the week. Don't want to call it a reversal just yet. Take it back to a daily chart. You haven't gotten anything outside day reversal yet, but what I do want to highlight is the rubber band action, the snapback that you see from this key zone. The major reason I was looking for failure down there was just how much stuff, for lack of better words, was lined up. You had the 200-day moving average, you had the 100-day moving average, you had the 50% retracement, you had the swing lows from previous back here in February, you had the former swing lows from here in October, and you had the actual July opening range highs, all lined up right there. So maybe I played it a little bit too close to the chest. Again, the spill here got a little bit deeper than I wanted. Long story short, we're now unchanged on the week. The basic focus is on a break of the weekly opening range still. If that breaks to the upside, it would validate a near-term reversal in Aussie CAD. Till that happens, I'm a little bit more reserved in the trade at this point. Okay, so near-term areas, just to rework the levels here from earlier in the week. now that you've made this near-term low, again, the opening range high for the week comes in right at that 38.2, so I actually do want to leave that there. But just to rework some of the top side levels, I want to take a quick retracement here, see how that looks. Okay, so let's clean this up a little bit. Let's clean this up a little bit. Okay, so this is what I'd be working with as near-term resistance, a little bit more critical, especially now since this median line formation has actually given us some play. You know, I'm going to catch that. I'm going to call that a hold still. Looks like a pretty strong downside momentum. This is something you want to pay attention to too, guys. Something I just look at when you're seeing price probe a major support level or probing a major resistance level for that matter, and momentum is behind it. Okay, meaning it's sub 30, meaning there's strong downside momentum really hammering the trade, and then price does something like this, right? That's something you want to pay attention to. That means despite the fact there was so much momentum behind the trade, it was unable to penetrate, and that kind of rebound really validates the break. Whereas, you know, if this was kind of coming right into support and it kind of rebounded and it rebounded off here, yeah, that would look clean, but it wouldn't give you the conviction of the snapback that you're seeing on a move like this. Same thing if price is at resistance. If it's an overbought territory and then it still can't probe through and you get the reversal, that's something you want to pay attention to. So long story short, could get some kickback from here. I'd be looking for a rally back towards one spot 0070, 0080, the median line formation here. And this would be your first area that you'd start to look for a little bit more of an exhaustion trade. If that breaks, the potential for a bigger move here is underway. But the fact that I'm holding dollar CAD shorts, meaning I don't really want to get too aggressive on, you know, CAD short position, which is an Aussie CAD long. It would be a good way to sort of synthetically hedge that position if you're holding the shorts that we're holding, whether you're holding on the swing trades or whether you're holding it here with us on the intraday. That might be a good way to offset any type of rebound we see near term in dollar CAD, which I do think near term has the potential for a rebound, guys, which is why, again, most of the positions closed. This would be a good way that you can kind of offset that, but near term, respect this resistance, okay? That's the level you need to beat to validate a reversal. And again, objectively, that's the weekly opening range high. So either way, if that were to break, that would shift the focus higher in Aussie CAD. Questions? To put things in perspective, again, take the daily chart. I probably should have gone over this first. You know, where we came off of is support. Again, one other thing I wanted to highlight is these slope lines. You know, sometimes basically if you just look at a trade longer term like this, guys, and just operate off this, it gives you so much objectivity. Basic trend line support off the lows from 2015, 2016, take some parallels. Boom. Take a parallel off the high from the late 2015 high, literally pretty darn close to that 2016 high. So again, that gives us free rein to a little bit more of a pop higher that still keeps us within the confines of this broader formation, which has been crystal clean, right? Boom, boom, overshoot, pull back. There's the median line we just missed on that complete breakdown yesterday. Top side, the 50 line comes in right back, right around 10096, just above that level we were looking at. Okay, moving right along. That is Aussie CAD. Aussie Yen, number 7. Here's what the Aussie Yen looks like. Bum, bum, bum. And here's what we looked like earlier in the week. So for Aussie Yen, very similar scenario, okay? I thought we were going to get the move into 81.36 when we saw that 83 level break. Remember, we talked about 83 for a while. We were actually playing the long side of 83 last week. It probed into 83 again earlier this week, and then we saw the downside break. As soon as 83 gave out, we were done. 200-day moving average was a nice area of support that we highlighted that gave us an initial bounce here. We were talking about the possibility for a rebound, but the bigger support structure being 81.36. That's a 50% retracement of the entire advance, not necessarily off of the Brexit low, but off that secondary low that we made in July. And that converges on basic slope support off of the Brexit low, so a little bit more of a key support range. And that's the same slope as this median line formation that we're trading in, broader multi-year, right? So here's the picture currently. There was the break of 83 that kind of shut down the long operation for us. There's the recoil off the 200-day moving average. Near-term resistance right back where former support was. Big support is still down here. So I wouldn't be surprised if this thing fakes everyone out. At this point, you know, I don't really know how to play this, to be completely frank with you guys. I just wanted to go over the trade, but I don't have any positioning on this. Obviously, I didn't play the breakdown in 83, so at this point, I would be interested in possible long exposure, or excuse me, short exposure on a rally back towards the 83 handle or back towards that median line, the weekly open. But, you know, do you want to get short into such a big support zone from here? I don't know. I think the exhaustion trade is the better way to play this, but I can't necessarily, you know, encourage you guys to get on the long side yet because we haven't gotten those classic reversal signals yet. The major thing I'd start to look for before I'd start to attack the long side of Aussie yen, at least the break of the weekly opening range highs, which we're nowhere near, a break of the weekly open, which we're approaching, which is why, again, like I said, that's still back at 83, just above that 83 handle, same region we talked about at the start of the week. An outside day reversal off support, didn't get that. You know, it's just not there yet for me to start advocating for the long side. But, you know, you're on the lookout. A break above 83 would set things off and would start to shift things. 83.76 being the weekly opening range highs, and the median line, that would certainly make it bullish. But in the meantime, you really have to look to see if this advance gets us back through the weekly open or not. A downside break of a descending formation typically is the strongest part of the decline. The fact that we've recovered back within the formation has me on pause. Okay, has me on pause. Keep in mind, this is an objective break of the yearly opening range that we made this month. So that really changes things for the Aussie. And the fact that we're coming in such a big structural support means if we do see failure, a move past the 84 handle, let's say, well, that kind of invalidates that opening range break and would change the picture dramatically. Okay, so focus range on this weekly open into key support 81.36, still the 50% retracement down here. Look for a break of this key range for some validation on Aussie yen. Moving right along, again, another risk, quote-unquote, asset we'll want to take a look at, and we'll take a look at some of the other indices if we have time, but for you guys who are very acclimated with trading equities, a good pair that's a good option to sort of keep an eye on. Euro-Aus, number 8. Coming into some support. Here's what Euro-Aus looks like. Here's what it looked like earlier in the week. On the 10th, we highlighted this position. And we were looking for the breakdown and essentially the move beyond the lower parallels. What is needed here to get this thing sort of cracking? Here's what the daily chart looked like previously, a trade that we've been following. Where's the last daily chart? Here we go. Right? Here's the reversal that we had caught or noted way early on. This is back on the 27th of March. It was the 143 handle, it was the 618 retracement, and it converged on a long-term trend line or slope resistance. That slope also caught the yearly opening high, or opening range high, I should say. Long story short, the rebound found some support and saw the rebound again make a complete hold at 618, right at 42.18, and we were looking to see the breakdown of this formation to give us the correction. Okay, here's what it looked like on the 10th. Looking for a really nice opening range just below 141.73, which was our sort of level that we wanted to see hold as resistance. 141.73 got compromised, but never even closed, essentially. A 4-hour candle. Did see a 2-hour close above there, but again, quick recovery. Data-driven yesterday. Charged the break of the weekly opening range. This is flirting with a big, big break. Okay? Here's the daily chart now, and here's what it looked like on the 10th. So we took out 40.50. Technically, that was our near-term key level that we were looking at. The lower parallel, I think, is what we had. Yeah, focus on a close below the lower parallel to validate a break, targeting subsequent objectives at 39.69. All the levels are the same, okay? 38.87 into 139. So the levels are unchanged as far as the downside, but I'm very interested to see if this really materializes, guys, into a close below that. This could be a pretty nice break. And again, I'm sure everyone's talking about on Twitter the head and shoulders break and all this. This is what I would interpret as the neckline that basically still puts us there right now. So be careful before chasing that pipe dream. I shouldn't call it a pipe dream. Before chasing that objective, I should say. Till then, I'm just playing it as a regular weekly opening range. Want to stay bearish sub 140.90 at this point. The initial opening range lows. Downside initial targets, like I said, unchanged, 39.68. Into the monthly open would be the first target, 39.53, this zone. And then bigger area is down here. 618 retracement, former swing highs, and the median line all converge down here, basically into the open of next week. Questions on Euro Aus? Pooja, have you gotten any play on this one? Watch for support, okay? Watch for this support to see if we get a close below this on a daily basis. I guess I should put this on the daily charts to give you guys a better picture. Get rid of this. And the reason that we're still favoring this slope is because it caught the lows. We broke through the highs, but if you take it parallel, well, it's pretty damn close to catching those highs, right? Boom, boom. And that's when you get conviction on the gradient of what the market's doing. And once you have that gradient, you have a little bit more of a decent play off it on one or two rebounds, something you want to pay attention to. Oh, yes, nice short yesterday, 141.88 to 140.50. Amen. Yeah, that 140.50 was the play. That was the play. Now, again, I liked it to keep some on, like I did in dollar CAD, bring the stop down. It would have been the play to do because it was just falling apart. But shoulda, woulda, coulda, right? Moving forward from here, let's see what we do down here at this zone. If it holds and gets the rebound, again, I'd be looking for the weekly opening range low to give us initial resistance here, possible entry for another move to the downside. And on that, is that 100 correct? Got to adjust that 100 for the new high. Again, some objective measurements. You see where the targets take you. There's room. Pooja says limits hit while I was away from the screen. Yeah, so you're not able to peel some off. Hey, it happens. Winner's a winner. No one ever went broke booking profits. I'll tell you that much. Okay, so that's Euro Aus. Number 8. Number 9. Let's jump into Euro Kiwi. Is this a break below the monthly open or not? That's what I'm trying to gauge. Here's what Euro Kiwi looks like. You have the monthly open and the 200-day moving average, which is what I'm so hesitant about. This is a trade that we highlighted earlier in the week. Here's what Euro Kiwi looked like back here on the 10th. Okay, We talked about 152. It's sort of like the 83 handle for Aussie, for Aussie yen is the bane of our existence. We were talking about 152 for a while. It's been a couple of weeks. We advocated the long side last week. It played out really well into resistance at 153.30. I think 153.15 was the level that we stopped the long side on it. And then the pullback came right back into 152. So the impetus on the start of the week was on a make or break level off that 152. And that's exactly what I think. It's exactly what I wrote right here. It was a make or break level. So long story short, 152 looks like it's breaking. It's at 151.70 right now. We're testing below that 200-day monthly open 50 line for the current operative slope. We haven't gotten any play off it, so I don't want to stress it, but it's at the same exact level. So why not just keep that in mind? And basically, I want to see where we close on this, you know, because if you take a longer term look back, I don't want to stress this sliding parallel, but it is here, and it did offer some support last month. And if you look out on the daily chart, same type of gig. Looks like we're tagging it as support right now. I'd be looking for initial resistance right back at the monthly open, the weekly opening range low. Okay, so as long as we stay below 52, the same level we talked about on the daily chart to start the week, I think you have to look lower. I think you have to look lower. Now, I just wanted to do this with you guys on the mic so we can kind of just go through the levels really quick together. At this point, obviously, we've broken this low, so this retracement is null and void. You're going to go ahead and drop that, clean this up. Former support break gives us resistance, so I do want to just leave this slope right now. But what I wanted to do is also take an extension off the high and see what a measured move looks like into the 100. Okay, and that highlights this. 150.47 as sort of an objective break as long as we hold below 152. Okay, and I don't want to necessarily stress this median line formation right now. I'm going to leave it. That might be a little better, actually. Okay, brings it in here a little bit, deadens the slope, highlights near-term support right here. Yeah, actually, so let's work with this. Not bad. So this again, objectively, your break of the weekly opening range gives you resistance right here at the monthly open, at the weekly opening range lows. That's 152. Same level. Support, I'd be looking to see, I wouldn't necessarily call this support, but I'd be looking to see what happens at the weekly open. If you get some play to the upside, or the U.S. trade open today, the last day of trade for the week, keeping in mind, if you get a recovery to the upside, look for some exhaustion into this region. Okay. Bearish invalidation. Still has to be up here. Still has to be up here. That's the only thing that would put me bullish. I wouldn't necessarily need to see a break of yesterday's high. Slope resistance, those former pivot highs. You've got a lot of kind of scratches of support there as well. A break back above 53.15, let's call it, would be invalidation for the downslope. As long as you stay below the monthly open right here, the weekly opening range, you want to look for a break. Targets at 151.21. Bigger support at 50.47. That's sort of a sweet spot near term. I'd be looking for some a bigger support. Also, that would be two equal legs off the high and the 50 line, which caught support perfectly right here. So a nice spot for Euro Kiwi. Any questions on Euro Key? That's number 9. Euro yen is blah. I don't really like it right now. I just wanted to highlight that we started the week talking about a big support. It was 116.65 into 117. It broke. Once we broke that, I didn't really have anything to do with Euro yen. So I haven't really touched this trade. As you can tell, all my markers are very delayed here. So you want to bring this down to here. you're seeing a little bit of a range bound right into the lower parallel. If you put a gun to my head right now, I would say go long, especially after what? This thing is ridiculous. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 days of straight down closes. If we close today lower, I mean, it's ridiculous. And any attempt to try to fade this has been very, very short-lived. I mean, less than a day on the biggest ones. Otherwise, it's been less than a few hours. So I'm not going to get caught trying to do that. I will note that we are seeing some slight divergence into the lows. We have been for a while. So I am looking for the exhaustion trade. I would need to see a breakback above 117 to get constructive again. Until that happens, you know, you're fighting a downtrend. But you know, daily momentum is still an overbought condition. I'm looking for the exhaustion. Don't have the guts to play it on Euro Yen, but take it for what it's worth. It's testing structural support any way you look at it, the lower parallel right here. If it rebounds, 116.65, 117 be sort of the initial topside targets, 117 being the near-term bearish invalidation. Questions on Euro, Yen? Good, because I hate it. Moving right along from here. Next up is dollar yen. And this is the real abomination, but actually this looks a lot clearer to me. And the only thing I wanted to highlight here is that 108 level finally hit, 108.77. We talked about it for a while. Longer term, 50% retracement, just lower. You have the 100% extension of the decline off the high. But more importantly, you also have the 200-day moving average, which hasn't been touched since November of last year. So also there in that zone, you have a sliding parallel of the current operative slope. This is just a parallel off these highs. Now, it's only a 2-point touch, but that 2-point touch, if you take a parallel, caught the lows in January and February. So I'm going to pay attention to it, especially now that it converges on the 200-day moving average and the 50% retracement. Again, don't want to encourage people starting to fight the sell-off necessarily, but look for exhaustion, look for momentum divergence, look for some of those telltale signs that the market's getting ahead of itself. And you're getting that here. You know, even on the 2-hour chart, you're seeing really strong momentum divergence. Now, albeit it is below 30, but price action lows is much lower, and the price and the oscillator highs, you know, there's a nice slope there. So yeah, I do think that, you know, you risk, you know, maybe another dump here into the U.S. Open, but largely speaking into 108.43, 108.77, looking for entries, looking for exhaustion for a possible play here in dollar yen. Now, one thing I do want to note, guys, is this. Objectively, it's still, I don't want to say it's early in the month because we're essentially mid-month, but this is a break of the monthly opening range. Here's the monthly open. You test the monthly opening range high, which came right below resistance. Your sweet, that's your kind of your best monthly opening ranges. And the downside break actually would have me looking for a late month flow. Again, opening range is not a strategy of itself, but sort of a guidance. So that's one of the things that has me curbing my appetite for a long dollar yen play. But we have to respect support. So near term, I do not want to take any new short exposure into 108.43, 108.77. I'm looking for exhaustion there. If that were to break, you got lots of levels to the downside. 107.49 would be just an initial target, but really I'd be looking for like 106.30. So again, not necessarily always my favorite pair, but when you have such clear-cut clarity on the levels, I think it's prudent to pay attention to. So look for exhaustion into 108.43, 108.77. Topside targets, you know, are the same. 109.75, 110.10. Excuse me. Key resistance would be right back up at the weekly open, 111.10 to 111.44. Again, that 111.44 for the last 2 weeks has been sort of the bane of our existence as far as trying to get any type of upswing on this. So that's still the level to be. Questions on dollar yen? All right. That was number 10. Dollar yen was number 11. Euro CAD, number 12. Horace, this one's for you. Here's what Euro CAD looks like. And here's what we looked like. So here's dollar yen. Okay, excuse me, from earlier in the week, just to recap again. No change to any of those levels. Yep. So we're trading right down here. 109.75 is now near-term resistant. Yeah, all the levels are the same. Just bring down that bearish invalidation level now to the weekly opening range highs, basically the weekly open. Okay, what did I say next? EuroCAD, excuse me. Here's what EuroCAD looks like at this point. So EuroCAD earlier in the week looked like this. I think we covered it on Sunday. Yep. Boom. So the daily chart was really marking this major support level that again seemed like it was going to be a very important break. Once you saw the break, that really pretty much validated the bias, and this is why these ones that I bring up on Sunday, especially on this one, I said it was kind of just on the radar for now because I really wanted to see if we were about to break that key support barrier at 141.17 to 141.91. Once you broke that, all these levels got taken out already, 140.91 to 140.95. That's basically what you're testing right now. Next downside target, 140.24. This is a level of which is our final downside target, and I'd be looking for some exhaustion there. That's an area of interest because you have the lower parallel. You have the December 2015 swing lows. If you go all the way back to here, it's also a very nice pivot. This is the December lows from the the December lows from 2016. And then as soon as you broke, it was resistance on consecutive sessions on the upside. Really nice pivot. All of those converge right here in the lower parallel. A little late in time here, but I'll give this thing some pocket space. All right, so that's sort of the focus range right now for EuroCAD on the daily chart. One last thing, bear with me 1 second, Horace. Let me just see what this looks like. Okay, so the 618's lined up at 40.95. I'm sure I had this on the intraday chart already, but just want to see what it looked like here on the daily. All right. Yep. So I did have it on the intraday chart already. So again, the intraday chart, I guess, is ready to go here. No changes. No changes. So we already had that extension right on there. Sweet. 2015 low converges on the lower parallel. Actually, in time, even here on the intraday charts, looks pretty sweet. 140.24 should be your next sort of key level of support. I'd be looking for some exhaustion. You're getting the onset of some divergence, albeit, again, below 30. Not the strongest reads, but price action, lower low, lower low, higher low, higher low. If we get one more dump into this on that divergent read, see if we got a trigger here. It's far out, but might be the onset of something. Okay, might be an opportunity to try to fade some of this move and get a rebound. Now, ultimately, that move I think you do want to fade, but you're coming into near-term structural support. You're getting that divergent signal. Look for some exhaustion heading into 40.24. Now, all the game plan remains the same, or the game plan rather remains the same, meaning if you get that breaks up 40.24, forget about trying to play the reversal. That was the game plan moving into the beginning of the week, was to look for that dip into this region where you'd look for some exhaustion. If that gives out, there's nothing until 39.28. That's another almost 100 pips to the downside. You don't want to fight that. So just keep that in mind here on Euro CAD heading into the close of the week, looking to see if we can get that exhaustion just a little bit lower near that 40.24 region. Questions on Euro CAD? Horace says, thanks. Hey, you're more than welcome, Horace. One of my favorite positions here. It's a slow burner. It's nothing for someone who wants something active, but if you're busy and can only check up every now and then, hobbling on crutches, it's not something that might be a good option for you. Okay. Who asked on the euro dollar? There was someone who was asking about that earlier in the session. Pete, coming right up. And then actually, I want to take a look at the Nikkei as well, but we are over on time, so I'm just going to take a look at this really quick. Here's what the euro dollar looks like. Look, I just don't like where it kind of bottomed because it faked the hell out of me, and I opened the week saying I have no clue. I think this thing's going to fall apart. Obviously, I kind of capitulated myself, I guess, and here's the reversal to the upside. But it's coming off a big region. The daily chart also kind of gave us last month's open at that region. It didn't really close with conviction. Here's the line chart look like below. Whoops. Wrong one. Below that level. You know what I mean? So I should have paid a little bit more attention, but here's the reversal. Long story short, we stopped at the monthly open and kicked back. Look for some support, excuse me, right back at 106.23, which is what we're testing right now. Okay, so for me, I just want to see a focal break of this range. I don't really have a very strong bias on this Pete, which is why I didn't highlight it on any the major reports over the last couple of days. I do think that you have a very well carved out monthly opening range at this point. I will constitute that move right there as part of the opening range into the 10th. First 10 days of trade, the first week of trade rather, you've made a nice range just below resistance. And for me, that's the break I'm looking for to see if we can get a little bit more validation on near-term bias here on euro dollar. Put a gun to my head, I would still think for euro you do make a new low before ripping. And that would coincide with a little bit more of a near-term recovery in the dollar before you start to move off there. From a technical standpoint, I just don't have the clarity to give you a little bit more of a clear-cut shot on this. But guys, real quick, so Pete, take it for what it's worth. I wish I had more conviction for you, but these are the levels I've been following for now on the euro. For what it's worth, if you want to take a snapshot. Hey, you're more than welcome. I appreciate that. So really quick, for the Nikkei 225, guys, you've all seen this chart, and I just wanted to highlight that the daily chart is threatening some pretty big things, is what I want to say. So what's happening this week would constitute a break of the yearly opening range here in the Nikkei. Remember we talked about 19,676, 19,636 for the longest time. It's the 1618 extension from the advance off the lows. It's the 786 retracement from the decline off the highs you made in 2015. You had slope resistance in there on the second attempt that we tried to break through. You had this consolidation, which now is a 3-point resistance, which has held. Support of the consolidation, which broke the 100-day moving average, which broke. I mean, where do you want me to go with this? I could keep going. Long story short, the first major area of support that we talked about, 18,596 into 18,584, you saw a couple of stretches below that. Yesterday was the first close. We're getting continuation. This thing could be a big catalyst precursor here of the downside. So just something to keep an eye on. I don't have, personally, guys, I haven't traded Nikkei 225 in quite some time, but I do want to throw it out there as sort of something you do want to pay attention to, and especially if this is sort of leading some of the other risk assets. You know, some of the moves that we're seeing here are validating or suggesting you could see a much larger move to the downside. Roth, gold, really quick. We are way over on time, but it's the close of the week, so we'll do a quick look. I don't want to touch it. I have to see what the weekly chart looks like on the close basis, because 1278, as you guys have heard me talk about for months, is huge for me. And if this really is a break above that level, geez, it changes everything for gold. 618 retracement from the decline off of last year's high, the 100% extension from the ascent off of the yearly lows. Take a scroll all the way back. This is trendline resistance off of the record highs that we set in 2011. So the implications of this break are huge. My guess, again, if you put a gun to my head, Mike, what's going to happen or I'll shoot you, I would say this thing's going to pull back before the weekly close and you'll get a weekly close sub 1277. Just my humble opinion. But at the end of the day, if we close above this, Raf, it's a breakout, man. And I think you'd look for the May high. That would take you into 1303. The 618 extension take you into 1325. Near-term target to the upside on a break or a hold above 1278 here in gold. So for me, it's all about the weekly close at this point. Keeping in mind, again, shortened holiday week heading into the close today. Essentially, markets will be closing for the U.S. for the week today. All right, guys, thanks for sticking it out. I'm sorry I'm way over on time. Thanks to everyone who attended. Best of luck trading for everyone who's celebrating. Happy holidays for this weekend. I wish you guys all the best, and I will see you, God willing, if everything goes well with the surgery, on Monday on Daily Effects. If not, definitely here on Tuesday on SB Trade. That's Tuesday, Wednesday, and Thursday of next week. We should be good to go. Best of luck trading. Again, have a great weekend, and I'll see you guys next week. Cheers.